Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Sunday, June 12th, 2022, and this is Blockhead Traders Weekly. In this week's episode, we are going to take a look at a loser and how to manage a loser a little bit in your portfolio. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there and say hello to myself or any of the other Blockhead traders. Love to hear what you're trading, love to hear your outlook on the market, and especially love to hear the type of content that you would like to see. But let's hop to this week's content about managing a loser. Now, this is bound to happen at some point in time in your portfolio. You're going to have a trade that is just not going the way that you want it to go. And you're going to look at some options on how do you manage that. This might be closing the trade. This might be rolling a trade. This might be, selling something to offset your losses. There's a whole myriad of options that you might consider. It's very important that you have a lot of this stuff laid out before you even enter the trade. We always talk about every time you enter a trade that you need an exit plan. And that exit plan is not only for taking profit, but it is also for booking a loss, which means no matter where the underlying is going up, down, sideways, you have a plan that says when these things happen, this is what I'm going to do. These are the actions that I'm going to take. And typically you're going to have an underlying thesis. And as long as that underlying thesis is still holding true, there's no reason to deviate from that plan. It's very important to have all of that written down before you enter the trade, because that is going to give you that balance when something starts to go against you. You're not going to get emotional. You can refer back to what you've already written down when you are able to think straight. Now, the particular trade that I want to take a look at is a trade that I will be managing this week. It is a trade that I placed in Apple. Now, I placed this trade in Apple back at the beginning of April, and I've already managed it once, and it's coming up for management again. And before I kind of show some of the charts and some of the P&L, I just want to give you a little bit of background on why I made this trade. Why did I enter it, and what was my plan? So I'd been building up various equity positions in certain underlyings that I am relatively bullish on long term, things that are more stable, kind of hold a lot of value, particularly pay dividends. Apple was one of these positions that I wanted to start kind of building up an equity stake in. And one of the ways that I like to build up a stake in a particular equity is selling options to enter. And the way that I do that is I basically sell a put, collecting premium. Now, I'll typically sell the put either at the money or really close to the money. The idea there is I'll wait for a particular support level and I will sell a put at that support level while the stock is approaching that support level. This is going to maximize the premium that I'm going to collect because it's going to be close to the money. And the highest premiums are always those strikes that are really close to where the underlying stock is trading at. Back when I made this trade in early April, Apple had kind of shown that 160 was roughly a level of support. And as we approached the 160 level, I went ahead and sold a put at the 160 price. And my thesis here is that long term, Apple is going to kind of rebound. It's going to come back. Tech has been hammered so far this year. Most of the NASDAQ off well over 25% on the index on the year. Apple is no different. It has basically been hammered since the beginning of January as well. And I felt it was really time for me to kind of start building up that position. But rather than just go out and buy the shares when we're at 160, I said, well, I'm going to sell a put at 160. And what that means is, should somebody else who bought that put from me want to assign me 100 shares of Apple, I will pay $160 a share for all 100 shares of Apple. And I'm willing to do that in exchange for the premium. And at that time, I had collected $3.46 in premium per share, which means I collected roughly $350 for selling that put. And the way that I will do that is I will hold on to that put until expiration, almost. And I'm looking to see if anybody decides to assign me those shares. If they don't assign me those shares and we are out of the money, then I keep 100% of my premium. I do not have the shares at expiration, and I just pocket the change. That doesn't help me build up my position, but it exits me for green. Now, if Apple goes against my thesis and starts to decline, I'll wait until that very last week to see if somebody is going to go ahead and put those shares to me. If they do, I'm okay owning Apple at $160 a share. I like that price. I like that long term. And I was able to collect $350 in premium while waiting for that assignment. Now, one of the things that I've been doing lately is when I get into that very last week of expiration, sometimes the week before, if I am in the money, but I have not been assigned, I will go ahead and roll that position forward a month. And what that basically means is I am purchasing that put back from the market, closing it out, and then I will sell another put at the same strike in the next month's expiration. And that always nets me a credit because there's not much time left in the current put. So I am basically get the same intrinsic value because it's the same depth in the money. And so the one that I buy back, let's say it's $2 in the money, costs me $2 to buy it back plus that theta decay. And then the one that I sell in the month out costs me that same $2 because it's that same distance in the money. Plus I collect additional time decay from the theta. And this is exactly what I did around the beginning of May. So I was coming up on the expiration. Now, in this case, I think I did it about 2 weeks early, where normally I like to wait for the last week. But the premiums were pretty good. I was still in the money, and I was able to close my position out and then reopen one for expiration in June, collecting another $2.45, which has netted me another $250 on the premium of Apple. So fast forward to today, and we are still sitting deep in the money. In fact, really deep in the money right now. And I thought about maybe waiting and just taking assignment again, but that doesn't make sense. I'm okay to be assigned at $160, but why not try to collect more premium and force an early assignment? And what I mean by force an early assignment is the other person that is holding the put that can put the shares to me. They can do that at any moment. They don't have to wait for expiration. And there's not much premium left in my particular option. And so the likelihood that I'm going to be assigned early is getting higher and higher. And while I'm okay with that, I might as well roll this thing forward again, collect some more premium, and then if that person wants to assign me early, at least I've milked a little bit more premium out of here. And so I started looking. Normally, I would just go 1 month out. So this was a June expiration. I would sell a July expiration. In this particular case, I've got some stuff going on in July. I'm not sure I really want to pay attention to this thing in July. And so I'm going to go ahead and roll this out to an August expiration. Now, the person that buys this from me very well could assign me early, and that's okay by me, but I'm going to collect a little more premium before that happens. So looking at the rolls on the close of Friday, now this will vary depending on what our open looks like tomorrow, and I will likely try to roll this either Monday or Tuesday of this week. And the way this will look is I will pull up the option chain and I'm going to look for expiration of that 160 put out in August, and I'm going to roll it forward. As of Friday's close, that looked like that was going to net me $1.45, thus collecting another $150 on this Apple trade. So what that will allow me to do is either keep pocketing the total accumulation of all of those premiums, which will be roughly $7.36 or $736. Or if I get assignment at 160, I will effectively get those shares at a $7.36 discount because I've been collecting the premium along the way. So let's go ahead and take a look at the chart here on Apple. And what I want to just show you is kind of the line of thinking that I had. So I opened this in early April. And we had just kind of come off this bottom. We bottomed out around 150, this really big rally up to almost the all-time highs of $182. And we started kind of falling off. And this is where I entered the trade after this first kind of gap down. As I said, look, I'm pretty bullish on Apple long term. Kind of the next level of support below here, I really felt was around that 160 level. And so as we kind of dropped here, that 160 was actually quite a bit out of the money when I sold it. But I went ahead and sold that 160 put. And sure enough, we came down and we really challenged that 160 level, bounced off it a few times, and eventually started to give it up. And what you'll see here is pretty much while it was challenging that 160 level, this is where I took the roll from that May expiration into June. And so when I did that roll, we were really dancing right at the money of that. Might have did it a week early. Maybe looking back, I could have squeezed a little bit more had I waited a week. But at the end of the day, that 160 didn't hold up and we broke through. And we went on a massive ride down. I mean, all the way down to around 135. And we had a big rally back up. Probably really should have looked at rolling this thing. Hindsight is always really 2020. Probably would have been best looking back to roll this before the CPI numbers came out on Friday, when the entire market just took a massive, massive smack. The day prior to CPI numbers, everything was down 2.5%, 3% on all the indexes. Really, really hot consumer price index number came out on Friday, much higher than everybody anticipated. And again, the markets took another 2.5%, 3% just dive. And that's really where we sit kind of today, is we're really approaching again this kind of real bottom level here, which we bounced off before. Like I said, I'm okay to own Apple. I have a lot of confidence in that company long term, despite any sort of recessions or things like that. And that's really why I'm looking to go ahead and keep rolling this thing, because that was my original thesis, is I'm going to take this thing to assignment, but I'm going to force somebody to early assign me. And if I don't get that early assignment, that last week of expiration, I'm just going to keep rolling it. So let's take a brief look here at the option chain, just to give you an idea what's effectively happening here. It's called a diagonal spread. It's a diagonal spread because effectively you're making one option trade in 1 month, and then you are making another one in a forward month. And so if we look at this and we set our expiration to kind of include both those, what we're effectively doing, you can see right here on this row, I am short the 160 put in Apple. It expires the 17th of June. That is this coming Friday. And what this trade is doing, it is buying back one June 17th put at 160, and then turning around and selling August 19th expiration put at 160. And that net credit is $1.45. And what you'll see here is it will push kind of my break even. Prior to having this trade, my break even would have been up here around $150. And then, of course, kind of putting that on, collecting that additional premium, it's going to go ahead and bump me down another $1.45 and allow me a break even down here to about $149. And it's just kind of collecting that premium as we go. It's a long way before this underlying gets back up in the money. Come August, if we're still not in the money and I still haven't gotten early assigned, I'm just going to roll this again and collect more premium, go from August to September, and just keep doing this, collecting premium along the way. So that brings us to the end of this week's episode. Kind of short, to the point. We're all going to have these trades that are not panning out the way that we would like. And this is where that original plan really comes in. You have a plan when you enter the trade for the upside, for the downside, and you stick to the plan. My thesis on Apple has not changed. My plan was to sell that put and continue to roll that put until I was force assigned or until I walk away with all of my profit as it expires out of the money. It's going to be a really busy week this week in the market. We got the federal FOMC meeting where they're expected to largely raise interest rates another 0.5%. There's a lot of noise out there about if that's even enough, given the far exceeding expectations of the CPI number from last week, where it came in much hotter than expected. And there's a few people out there looking for the Federal Reserve not just to hike by 50 basis points, but potentially 75 basis points or even 100 basis points. One thing is for certain, that once that is kind of out there, the market will kind of start to digest it. Right now, there's a lot of uncertainty, and so that drives a lot of volatility. And once that number is kind of out there, the markets are going to start to react. They'll probably explode up or down. Just based on how somebody is going to read that. At the end of the day, it's going to start kind of calming volatility a little bit because it's going to take some of that uncertainty out of the market. No matter how you're trading, make sure that you have a plan. Good luck out there. Have fun this week. And remember, think outside the block.